Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming you live on yorbamedia.com. All right, Nick Santiago, President, CEO in the Money Stocks. Nick, welcome back to the show. Thanks for showing up.
Thank you for having me again, Michael. Appreciate that.
My pleasure. Well, heck, you're up well over 200%. You knock them dead. 5 out of 5, 6 out of 6, 7 out of 7 in the trading room day after day. God, what's not to like about it?
Well, we're having a pretty good year. Hopefully we'll continue that. We don't always win on every trade, so everybody needs to know that. There's no, we don't bat 1,000, but 7 out of 10, 8 out of 10 is attainable.
That's right. Yeah, that is exceptionally good. Okay, you want to start today with USO, the oil market. Yeah,
this is something that I brought up on your program, I guess about a month ago, about a month ago, and I said I was short oil. This should start to fall, and USO is United States Oil Fund. It's a good ETF that tracks light sweet crude, and as you can see, light sweet crude has come down pretty decently here. So we covered half of that position just the other day, and now we're still holding half. So I think this is a little bit oversold, so we could be due for a short-term bounce in the USO. But I just wanted to let your listeners from a few weeks back know that that played out pretty nicely, and we're going to look for lower prices on this USO as well, down towards that $33 level.
Okay, 33, let me see. That would take us relative the futures back into the July lows. Is that about right?
Yeah, that's about right. Somewhere right into that late June, early July level. Okay. So we should get back down there. I'm thinking within a couple of weeks. But right now we are short-term oversold on the USO. So expect a little bit of a bounce for a couple of days. I think that's possible.
Okay, let me define this a little bit to you. So that low relative to crude oil, light sweet crude, would be somewhere around $93 a barrel. The bounce back up that you're looking at, because this is an opportunity here, a place for somebody to go in and short the rally or short it once the confirmation's there. Give me some numbers where you think we may rally to. Should we do that?
Well, I think light sweet crude has a real good shot of getting down towards around $92.
Okay.
Once price does get to that level, I think there's probably going to be a bounce play in there, but I don't think it's going to be all that much. I think you'll get a bounce play probably towards $97, $98. As you know, Michael, I'm in the camp that oil is on the verge of topping out. I think natural gas is just taking over the entire world. So we'll get bounces in there. There'll be trades in there. Oil's not going away. It's here for the remainder of life, I guess. But I don't think we're going to see $110, $120 oil unless there's a war or some major geopolitical event.
Got that. But what I meant was, let's say, go back to USO, because that's the one you're trading. You're thinking of a potential oversold short-term bounce from here.
Oh, well, right from here, but I don't think it's going to be all that much. I think it's just going to basically be a sideways move, maybe into 35, 50 or so.
That's what I'm looking for.
Right, and then depending on the pattern, traders that have not gotten short already will have a chance to get short. Okay,
and then take it all the way down to, 33, I think is
33 is where I'm going to look to cover the remainder of the position. But then again, I'm already out of half of it. So just to let everybody know, when I talked about that on your show, I think the USO was up around 38. So, it's a nice chunk of change in the pocketbook already.
Nice job. Good work. All right, GLD, what do you want to do with this one?
Yeah, I wanted to bring up GLD because that's behaving really well as of late. We had a nice head and shoulder pattern on the GLD, which was signaling downside, and that pattern has failed. So I think traders could give the GLD upside to around 133.20. So if you're trading the GLD, which is the Spider Gold shares, you have a shot at that move around 133.20. That's a level, though, where I'd become real protective. I'm not saying it's a short at that level, but what I am saying is that that's where money is going to come off the table. So we'll need to consolidate. Price will need to consolidate on the GLD around 133 before moving higher.
Okay, so are you looking to initiate any long positions on this right now?
No, but I do own gold bullion, and around 133, that would probably be the upside for GLD at the moment.
Okay, all right. At that point, are you looking for further downside on this market, or just trade the range?
No, I wouldn't do any. I would not short it. I would not look for downside at that level. Just You'd have to watch the pattern. But looking at the pattern that it's made from the recent low, it should have upside to that 133 area.
Okay, got that. Because it just now is getting over because of 50-period moving average on a daily basis, 129.69, 129.99. It just just now getting over that. So
yeah, it's into that level now, but it should. If you noticed 2 days ago, it hit that 50-period moving average.
Yep.
And so the first hit is the best hit. The second time it hits that moving average, it is now. It is not as that 50-period moving average is not as strong. So I think it's going to be able to get through and trade right up into that high pivot that it made on the 19th of September.
Okay. All right. That's good info. GDX.
Yeah, this is the gold miners ETF. So not quite the same thing. Gold miners, have struggled really throughout the entire year, even beginning, you can make a case even in 2012 as well. But right now, they've really staged a nice bounce. I think the pattern there tells us that the GDX, which is Market Vectors Gold Miners ETF, should trade up to the 2770, 2780 level. That's where traders need to be careful. Where at that level, that's where it can turn back down. But again, it will all be about the pattern at that stage of the game.
Are you already in this?
I am not in this. No, okay. I am not in the GDX at the moment.
All right, because I'm just seeing a breakout over, and the market's not closed yet, but a breakout over that high that occurred 2 days ago. So you're looking for a nice little poppy momentum trade, so to speak.
Yeah, I think the pattern, the way this has cleared the 20 moving average, and the way this has gotten back up over the past week shows us momentum should be up to 27.75. Okay. However, around that level, if it gives us a base, I will be looking to buy it, but I will probably need to see a week or two of sideways action first.
Okay, all right. J.P. Morgan, the bank.
Yeah, J.P. Morgan's one we talked about on your show over almost every week for probably who knows, the last 6 months, I guess.
2 years. But, 2 years you've been talking about this.
But the last time I was on your program, I had told traders, and I think that was... I think that was the 17th. I said J.P. Morgan should have upside to 54, 54 and a half, and then it should turn back down. And you can see the stock basically went as high as 54.85, and now it's trading at 52.46. I would not be a buyer of J.P. Morgan at all. I think traders are going to get a real good chance to own this stock at $47. Don't touch it here. It has no upside potential. I know they're settling lawsuits, which are somewhat bullish for the stock. But the stock has to work off there's a lot of distribution still going on. So I would look at this one around $47. Don't short it yet until it gives you a bearish pattern, which could develop, and I'll give an alert in my trading room for that.
But once you get that, if you're long the stock, writing calls against out of the money calls against this, could be a very decent play on that one.
Oh, absolutely. Anytime you could take in some premium and own a stock, that's not a bad way to play it.
Okay, so
but I think you could probably own the stock outright at around $47, $48 for a decent long play.
Okay, all right, that sounds good. All right, ITB. First time I think you've spoke about this on our show.
Yeah, ITB is basically the home builder ETF. It stands for the iShares U.S. Home Construction ETF, which is basically another way to play the home builders. And this has been a very, very range-bound trade. This ETF goes up when yields on the 10-year U.S. Treasury note go lower. And right now, yields are about to bounce. This should be topping out. So I would just warn traders that are falling in love with the housing stocks again. This is a very range-bound trade. Right now is a spot where you would want to take your money off the table if you own home builders, and you could look to get back in something like the ITB around $21.
Okay, well, long-term trend. Let's look big picture, because I was just talking to a guy that I work out with yesterday about two things. One about the home building industry, and the other about the U.S. dollar, which I want you to cover after this one. But long-term trend on this, do you still have bullishness in mind for that sector?
Well, the trend is still up, and we want to respect that. But I'm not going to be as bullish as I have been once we get into 2014. We are seeing signs of a lot of leadership that's starting to deteriorate, so we want to be a little bit careful. But I still think there's potential upside in the home builders over the next 6 months. The one thing I will say, though, is that it's going to not be, the easy move is made in 2012 and the early first half of 2013. This is going to be more of a trading range move. And ultimately, I really don't know if the ITB, I'm going to use that as an example here, could really trade much further than $26 or $27.
Okay. How'd you do in the trading room today?
Had another good day. It was a little bit on the quiet side. The volume trends are a little bit lower. But we had about 4 decent scalp plays today. So for a slow day, that's not a bad day.
Great. All right. How does everybody reach and get in those rooms with you?
Yeah, you just come on over to In the Money Stocks, take a 7-day free trial to our intraday stock chat. Also come out and check out our research center. You'll get all of our nightly setups. You'll get all of my cycle work. You'll get all of my market sentiment that I put out, and all of the trades that I put out as well each and every night.
Great. Thanks for doing a great job again, Nick.
Appreciate that, Michael. Thank you for having me. Have a great day.
You too, everybody. Nick Santiago, President, CEO, InTheMoneyStocks.com. There's a guy who hits it out of the park for you. All right, coming up next, we're going to